You know what's funny? We spend our entire 20s being told we're throwing money away on rent. Our parents say it. Our friends who just bought their first condo say it. Even that one uncle at Thanksgiving who still thinks a firm handshake gets you a job says it. You're just paying someone else's mortgage, and so you save. You stress. You skip vacations. You eat the same meal prep for months. You watch that down payment number slowly climb in your savings account, feeling like you're finally doing the responsible thing, the adult thing. And then one day, you sign those papers. You get the keys. You post a photo on Instagram with the house emoji and the key emoji, and everyone congratulates you. You made it. Except something feels off. Because now you're locked into a 30-year commitment that costs more than you calculated. You can't move for that job opportunity in another city. You can't downsize when life changes, and that freedom everyone promised you. It's nowhere to be found. Here's what nobody tells you. Homeownership isn't the investment you were sold. For millions of people right now, it's become a financial prison with a white picket fence. Let's be clear about something. I'm not saying buying a home is always a bad decision. I'm saying we've been fed a narrative that's outdated, incomplete, and frankly, dangerous for most people's financial health in 2025. The idea that homeownership equals wealth was built in a different era. An era when homes cost 3 times your annual salary, not 8 or 10 times. When you could reasonably expect to stay at the same company for decades. When moving across the country for work wasn't normal. That world doesn't exist anymore. But the advice hasn't updated. We're still operating on our grandparents' financial playbook, and it's breaking people. Here's the thing most people misunderstand. A house isn't an investment in the way stocks or bonds are investments. It doesn't generate cash flow. It doesn't pay you dividends. It just sits there, costing you money, month after month. And I know what you're thinking, but it appreciates in value. I'm building equity. Sure. Sometimes, in some markets, if you're lucky, if there's not a recession, if your neighborhood doesn't decline, if property taxes don't skyrocket, if you don't need a new roof or foundation repair or complete Weisweiker replacement. The psychology here is fascinating. We treat homeownership as this sacred milestone because that's what we've been conditioned to believe. It's the American dream, right? But nobody ever asks, whose dream is it really? The banks love it. They lock you into decades of interest payments. The government loves it because it keeps you stationary, employed, paying property taxes. The entire economic system is designed to push you toward this decision. And here you are, thinking it was your idea all along. Let me walk you through what actually happens when you buy a house, beyond the Instagram moment. You save up, let's say, $60,000 for a down payment on a $300,000 home. You're proud of that. You should be. That's $60,000 of pure discipline. But the moment you hand it over, that money becomes illiquid. It's locked inside the walls of your house. You can't access it without selling the entire property or taking on more debt through a home equity line. Now you've got a mortgage. Let's say it's a standard 30-year loan at 6% interest. Your monthly payment is around $1,800. But here's what they don't emphasize. In those early years, most of that payment is interest. You're paying the bank, not building equity. Over the life of that loan, you'll pay nearly $350,000 in interest alone on a $300,000 house. You're essentially buying your house twice. But wait, there's more cost that nobody warned you about. Property taxes. Let's say $3,000 a year, but that goes up. Homeowners insurance, another $1,500 annually, also increasing. Then there's maintenance. The rule of thumb is 1% of your home's value per year. That's $3,000 annually for things breaking, wearing out, needing replacement. Add it all up, and your $1,800 mortgage is actually closer to $2,500 or even $3,000 a month in true costs. Now compare that to rent. Yes, you're paying someone else's mortgage, but you're also paying a fixed, predictable cost. You're not responsible when the water heater dies at midnight. You're not trapped if you need to relocate for a better job. You're not hemorrhaging money into maintenance and repairs. And here's the part that really gets me: the opportunity cost. That $60,000 down payment? If you had invested it in a basic index fund averaging 8% returns over 30 years, it would grow to over $600,000. $600,000. Instead, it's locked in your walls, appreciating at maybe 3 or 4% if you're lucky, in a market that might crash, in a neighborhood that might change, in a house that's literally deteriorating every single day you own it. But beyond the math, there's something deeper happening here. Something psychological that's even more insidious. Homeownership changes your relationship with risk. Suddenly, you can't take that career leap. You can't move for love. You can't downsize when your kids leave. You can't adapt. You become rigid, stuck, financially and emotionally tethered to one location, one decision, one version of your life that you committed to years ago. I've watched friends turn down promotions because they just bought a house and couldn't move. I've seen people stay in dying industries, in cities they've outgrown, in relationships that aren't working, all because they couldn't afford to sell. The house was supposed to give them stability. Instead, it took away their options. So when does buying a house actually make sense? When it's a lifestyle choice, not a financial one. When you found a place you genuinely want to stay for at least 7 to 10 years. When you've run the real numbers, including all those hidden costs, and you can still afford it comfortably. When you have a stable income and a fully funded emergency fund. When you understand that this is about your quality of life, not about building wealth. Because here's the mindset shift. Your primary residence isn't an investment. It's an expense. A place to live. And that's okay. The wealthy understand this. They don't tie up all their capital in their primary home. They invest in assets that actually generate returns, and they live in homes they can comfortably afford. Sometimes they rent. Sometimes they buy strategically. But they never confuse their home with their portfolio. The freedom isn't an ownership. The freedom is in options. When you're not house poor, you can invest more aggressively. You can build a portfolio that actually grows. You can take career risks. You can move for opportunities. You can adapt when life changes, and it will change. Think about it this way. Would you rather own a $300,000 house and have no liquid investments, or rent a comfortable place and have $200,000 in a diversified portfolio generating passive income? One makes you feel like an adult because that's what society told you. The other actually builds wealth and maintains your freedom. The prison isn't having a mortgage. The prison is believing you had to get one to prove something. To someone. To yourself. If you're renting right now and feeling pressured to buy, here's what I want you to do. First, calculate your real cost of home ownership. Not just the mortgage. Add property taxes, insurance, maintenance, opportunity cost of your down payment. Be honest. Be thorough. Then compare that to your current rent. If homeownership costs significantly more, ask yourself, is it worth it for the lifestyle benefits, or am I just trying to check a box? Second, if you do decide to buy, make sure you have 3 things in place. 6 months of expenses and emergency fund, separately from your down payment. A down payment of at least 20% to avoid PMI and reduce your monthly burden. And absolute certainty that you'll stay in that location for 7 to 10 years minimum. If you can't check all 3 boxes, you're not ready. And that's completely fine. Third, consider what I call the Freedom Fund strategy. Instead of saving every dollar for a down payment, split your savings. Half goes toward potential homeownership. Half goes into investments. This way, you're building wealth regardless of when or if you buy. And if you're already a homeowner feeling trapped, understand this. It's not permanent. You have options. You can sell. You can downsize. You can rent it out and move. The decision you made 3 years ago doesn't have to dictate your life forever. The key is recognizing that homeownership is a tool, not a trophy. It should serve your life, not the other way around. Look, I get it. There's something deeply emotional about having your own place, about painting the walls whatever color you want, about building something that's yours. And if that's what you want, truly want, and you can afford it without sacrificing your financial future, then buy the house. Enjoy it. Make it a home. But if you're doing it because you think you're supposed to, because you're tired of people saying you're throwing money away on rent, because you think it's the only path to wealth, pause. You're not behind. You're not failing. You're not throwing your life away by renting. You're preserving your options. You're staying flexible. You're building wealth in ways that actually compound. The real financial freedom isn't in owning property. It's in owning your choices. And right now, in this economy, with these prices, with this much uncertainty, choosing to rent might be the smartest financial decision you ever make. The prison door is open. You just have to be willing to walk through it. If this shifted how you think about homeownership, do me a favor and hit that subscribe button. And drop a like if you want more content that challenges the financial narratives we've been sold our entire lives. Progress beats perfection, always.